Hello, welcome to part 3. Yes, in the last two parts, we talked about business registration, we talked about business planning. Now we talk about taxation. Taxation is a good thing. And by the way, before you're taxed, every tax that is assessed to you has to come through legislation, some form of act. These things of people coming up and giving you taxes, you need to ask them for where they get the power and the mandate. So we have taxes which are by statutory, that's set by parliament. Then we also have municipal council or local council taxation, which is also by the local council legislation. So for a business, especially a startup, it's important that you register for tax. So the kind of tax you're going to register for will be VAT, value added tax, which is 18% of your sales. That is output of 18%. So, okay, this is how it's done. When you make sales, 18% of the sales, so you're supposed to pay, you're supposed to charge 18% on top of the sales. Then everything you buy or purchase, those are inputs, you're going to be paying 18% more because your inputs are outputs from someone else. So that other person you bought from actually charged you 18% VAT. So what happens? The net off is what you remit to URA. That net off is the 18% you make on sales minus the 18% you incurred during purchasing time for your inputs. So the difference is remitted to URA every 15th of the preceding month. So you make sure that you register for VAT, and because if you don't, most companies will be missing out on their input VAT. So your sales, they'll be buying from you while they're incurring your sales, sorry, will be their inputs. So they'll be buying from you when if you don't have VAT, they will not be interested because it will not make much sense in their P&L. P&L is profit and loss. So we also have what we call corporation tax. Corporation tax is 30% of your total profit for the year. It's usually paid 30 days after after the calendar year, your calendar year. So you make a provision after 6 months, then you also make a final payment after 30 days. Another 6 months, you make a final payment. So on top of that, there are other taxes that you need to pay. That is withholding tax. Withholding tax differs from 5 to 30%, depending on the item that has been incurred. The most common withholding tax is actually pay as you earn. This is amount of money you deduct from your employees, and then you remit that money to your URA. So that withholding tax, or commonly called a payee, is usually deducted according to a tax band, which is also available in the Income Tax Act schedule. So so those are major taxes that you need to register for. Make sure that when you go, you check those boxes of corp tax, VAT, and then withholding tax. Yes, in the next, okay, on top of that, if you're a business, really you don't want to get into the law, you need to pay all statutories. You don't need to get caught up by the provisions of the law. So in that is also National Social Security Fund, which is NSSF. NSSF is what happens is you as a company are going to contribute 10% to your employees, and your employees, you deduct 5% from your employees, making 15% of their gross pay, and that money is remitted to URA every 15 days or so after the month has closed. So when you're underwrite, when you do your taxes and everything, it's very easy for you to get contracts, because at the end of the day, you will be required to always attach your tax clearance certificate if you are to deal with government. So it will be advisable for you to register for tax. So like I said in the beginning, before you register for tax, you must have registered. So you register for your tax, you do your business plan, and then you register your business, you do your business plan, and then register for tax, then you're ready to open shop. So we shall go into the technicalities of how to run day-to-day management of the business. But now you get at least an idea. After these three videos, you now get an idea of how to run a business, like a corporate business. Okay, it can be artisan, it can be whatever it is. But if you put these things if you just write down these things, they don't cost a lot of money. It would cost you probably 300,000 or 150 or 75 plus 150 if you do it yourself. Then if you hire someone else, then the cost could go up from 500 to $1 million. What? Because if you hire a lawyer or an accountant like me, I'll be charging you, and I'll be charging you. But for me, because I support small businesses, I only charge you 500 for everything. Yes. So we'll meet again when we discuss something else. That will be business environment. That is competition, how to leverage your knowledge and skill, how to keep your business afloat using various techniques, among of which is guerrilla marketing and then other things. So we'll meet again next time. Thank you. God bless.